All right, what's happening, folks? Welcome on back. As promised, we're going to be doing some bank reconciliations. Remember this from like freshman or sophomore year accounting class when you fell in love with accounting, right? You go, man, I love these bank reconciliations. I know I've got to be an accounting major. I know, you're like, shut up, stupid. So here we go. There are two general forms of a bank reconciliation. Most of us are very familiar with the simple reconciliation, but there's something called a reconciliation of cash receipts and disbursements that I'll show you later. Bottom line is a reconciliation is going to explain the difference between what? The cash balance in the bank versus the cash balance on the books. The goal is to come up with a quote unquote true balance that we can then report on the balance sheet. Okay, so the components of a simple reconciliation, we got to do our bank adjustments. So when we adjust the bank balance, two things we're looking for. Deposits in transit. Now that's already in the book balance, so we got to add that to the bank balance. And then the outstanding checks. That's already been deducted from the books, but it hasn't been deducted from the bank yet. So those are our two main adjustments we're looking for bank adjustments, other than maybe there's an error. If there's no error, just do your bank adjustments, add your deposits in transit, subtract your outstanding checks. Okay, the book adjustments, we got to put that in our bins. The book adjustment goes in the bins, B-I-N-S. What does that stand for? Well, the B and the I, let's start there. Bank collections, we got to add that to the books. The bank collected it, it's in the bank balance, but not in the book balance yet. Interest income, that's got to be added as well. That was added by the bank, but it hasn't been added to the books yet. So there's the B and the I, they both get added. The N and the S, insufficient funds, a check bounce. Somebody wrote us a check as we saw earlier and it bounced. Well, that's been deducted by the bank. We now have to deduct that from the books. And then the S in bins, service charges. That's already been deducted by the bank, but it hasn't been deducted from the books yet. So the B and the I get added to the books. The N and the S get subtracted from the books. So we do our bank adjustments. We put our book adjustments in our bins, B-I-N-S. Not so bad. Now, the steps in a bank reconciliation. Well, we want to reconcile both the book balance with the bins and the bank balance with the due. All right, we want to get a true balance. Once we have that true balance, that's going to appear on the balance sheet under cash and cash equivalents unless it's restricted cash and it's related to a non-current asset or non-current liability, as we saw earlier. Okay, so the first thing we're going to do is adjust the book balance. Okay, we do that with the bins. We add the B and the I, the bank collections, the interest income. We subtract out from the books the checks that bounced, NSF checks, non-sufficient funds, and then we also subtract out the service charges. So now we have the true balance per the books. Now we got to get that same amount for the bank. So we got to do our bank adjustments. DO, what do? Add the deposits in transit, subtract the outstanding checks. Okay, that gets adjusted from the bank balance. Now we should have the same true balance for both the books and the banks, and then we'll report that on the balance sheet. So here we go. Requirement. You ready? Let's come up with the true cash balance, the adjusted cash balance. Well, they tell me, Burbank Company, their records, the books, we've got an unadjusted balance of $12,650. Stop right there. If I'm taking the exam, I'm thinking I got to adjust that book balance. The bins. The bank collections get added to the books. The interest income gets added to the books. The N and the S, the NSF checks and the service charge get subtracted. So the first thing I want to do is adjust that book balance with the bins. I got the $12,650. I do not have a B or an I to add, but I do have an N and an S. I have an NSF check I got to back out. I also have a bank service charge I got to bank out. So we subtract out the 10 and the 90. Now we have the adjusted book balance, the true balance, $12,550. All righty. Now, did they give me a bank balance? Yes, they did. They gave me a bank balance as well. Now, what was the bank balance here? The unadjusted bank balance, well, that's $10,050. So I got to do the bank adjustments, the D and the O, the deposits in transit, and the outstanding checks. So I want to add those deposits in transit. So I see that deposits in transit, $3,000. I add that. And then I'm going to subtract the outstanding checks. That's already been deducted from the books, but not yet the bank. And that amount is $500. So the 10,050, add the 3,000 deposits in transit, subtract out the outstanding checks, and you got 12,550. Same result, different format. Both of them now reconcile. That's our true balance that'll be reported on the balance sheet. So that's an example of a simple bank rec. Just be mindful. We had no errors in this example. Anyone can make an error. The bank might make an error. You might have to add that number in or maybe subtract it. If they put something in your account that's not yours, you got to back it out. If they deducted something they shouldn't have, okay, then you got to add that back. Or you might make an error to the books. And then you got to figure out, well, is the book balance too low? Did we make an error that we wrote, took something out that we shouldn't have, add that back, and vice versa. Alrighty, now something that's probably less familiar. You probably just have to recognize it. What's a reconciliation of cash receipts and disbursements? You're going to see it's a 4-column reconciliation, or what they call a proof of cash. You have last month's balance, then things that have been collected, things that have been paid, and then this month's balance. Okay, so what we want to do is have a proof, so to speak, of the proper recording of cash transactions. You're going to see all 4 columns are going to have totals. Whether it's the book or the adjusted book or the adjusted bank, those 4 totals should be the same. Last month's balance, total of receipts, total of payments, and then this month's true cash balance, all right? Now, we want to reconcile any differences between the amounts that the depositors recorded and what the bank has recorded, all right? So let's take a look at this example. And again, first thing I want to start with, all 4 adjusted balances. All 4 adjusted balances, there are 4 columns. Whether it's per the books or per the bank, they have to be the same. So the 12,550, the 15,715, the 5,017, the 23,248, those all have to be the same in case you have to back into any numbers. Now, the first column is last month's balance, okay? And notice the balance per the books, we adjusted that, 12,550. Well, that reconciles with the balance per the bank, 12,550. All right, now the next column is the receipts. What we recorded as receipts on the books versus what was recorded as a receipt on the bank. Now that adjusted balance, 15,750, has to be the same. The third column is the payments, what we deducted from the books versus what we deducted on the bank. And that balance has to be the same. That's the 5,017. Your final column all the way to the right is basically your simple bank reconciliation all over again. So we start with the unadjusted book balance, and then we make our adjustments, the bins. So I'm going to add any bank collections. I had that, 3,050. I have no interest income to add, so I skip that. Do I have an NSF check? Yes, I do, 285. That's got to be deducted. And then I have the S in bins, a service charge of $15. That's got to be deducted. So the fourth column is basically your simple bank reconciliation. So the true cash balance for the end of December is that $23,248. Now I take my unadjusted bank balance, $22,650, all the way over in the right-hand column. And then I got to do my bank adjustments. I got to add my deposits in transit, and I got to subtract my outstanding checks. So my deposits in transit, 4,000. My outstanding checks, 3,402. And now we have the exact same adjusted or true balance, 23,248, that could be reported on the balance sheet. Okay, and I just want to point out, folks, you'll see the first column for the bank. You see that 3,000? Okay, what is that 3,000? That's really a November receipt. We adjusted that in the prior example. That's really a November deposit in transit, so we included that in November. Now, technically, we collected that in December, but that's really a November receipt, not December. So we back it out of the December receipts. And then do you see the 500, the outstanding checks? Okay, even though that was recorded by the bank in December, we adjusted that. That's really a November payment. That's where that belongs, okay? So that outstanding check of 500, they have that included as a December payment, but we reversed that. That's not really a December payment. That's really a November payment. All right, so any missing piece of the puzzle, you should be able to fill it in. Ultimately, the most important is the right-hand column, okay? The bank, simple bank rec there, all the way on the right. Okay, so I think this might be a good point. Just bang out your cash and cash equivalent questions. Remember the restricted versus the unrestricted cash. If it's legally restricted, do not include it in cash and cash equivalents, okay? If it's restricted by management, if it's associated with a non-current asset or non-current liability, make sure that's not included with our cash and cash equivalents. That would have to be included with non-current assets, all right? So try these questions, and I'll see you back in a little bit. Slow and steady wins the race. Get off to a good start, correct your mistakes, learn from your mistakes. See you in a little bit.